Let's look at crude oil WTI futures. We're currently trading just below $76, and the forward contract's October 76, November 75, December 74, January 73, and call it 72 in February and March. So a little bit of a drop-off, not much. So not much to be said from there, except that there's not much excitement about this market. Let's have a look at what the COT report looks like and any comments here on barchart.com. So October WTI crude CLV 24 Thursday closed up 1.39. That's 1.87%. Crude oil and gasoline prices settled moderately higher Thursday on signs of strength in the US economy. That supports energy demand. We saw strength in GDP, and the economy, on the face of it, is pretty strong. Crude also moved higher as supply disruptions in Libya threatened to tighten global crude supplies. In addition, Thursday's rally in stocks shows confidence in the economy, etc. So pretty much a stronger outlook for crude, and as you saw from futures, flat over the next 6 months. Yeah, and there's another comment here, stronger dollar on Thursday, also limited gains because crude oil is priced in dollars. Looking at the COT report, you can see commercials 664 long, 918 short, so heading to the short side, roughly equal on the additions and subtractions. Producers 17 long, 400 short, so very, very short on the producer side, not much change to the balance. And then managed money 204 long to only 35 short, so completely the opposite way to the producers and the commercials. Let's have a look at the swap dealers, pretty important. Not a lot of volume here, actually, 48 long and 418 short. So they're heavily balanced to the short side. In other words, expecting the market to move up because these are the swap dealers, the hedgers, the market makers. And then other reportables, quite a lot actually, 89 long, 37 short. And also in the non-commercials, 294 long to 72 short. So biased to long side. So a bit of a mixed picture, but generally those with the money are betting for this to go long. I actually differ on this view, so let's have a look at the chart. I'll show you why. Here's my WTI day chart, and the day chart is the bread and butter of the swing trader. Just to remind you that the swing trading blueprint opens on the 14th of September. There's a link below for the early bird list. Make sure you're on it. So this is the day chart for WTI. And this is the path or the picture that I've had drawn in for a long time now. And you can also see the red arrows where we've been shorting. My target's the bottom of this red channel, and that could take us into the mid to low 50s. We've also got a shorter channel shown by the center line of this larger channel, this dotted blue line, and that forms a sort of an upper sort of margin of this larger channel. We're still trading in the upper portion of that, as you can see, in the upper half of this big channel. So still relatively bullish. These red arrows show the short positions that we've taken in the past, and the last one's down here at this current red arrow. And you can see we've just moved slightly above it, so just slightly out of the money on this last trade entry. These other trades are all closed now, all these shorts. So the only trade that we've got open is this current short from this red arrow. And that's around about $76.50. We're being held down by the 200, the 50, and the 100 period moving averages above us. And I still think we might get a final rally back up to the top of the channel. That could take us into the low 80s, 81, 82. And maybe if we don't get that far, we might get up to 80, this previous swing high, this Fibonacci retracement number, and this order block level around here. So I've currently only got a small position on here and looking to add to this if we should rally into these red blobs. Target, first of all, back down to this bottom here. It's actually a triple bottom. We've got to be cognizant of that because oil also likes triple bottoms and triple tops. So we'll be watching this very closely. A close beneath this triple bottom will add some more momentum to the downside. So that's the way it currently looks. We're short with a small position, willing to add on rallies into those blobs. If we don't rally, we'll hold on to our position, wait for a breakdown below about 72, the bottom of that channel or that triple bottom, and then potentially resell or add to our short position on a retracement back up to that level at about 72, the triple bottom level, for a move back down after that. Peanuts barking in the background. I think it's time to stop. I'll see you in the next video. Make sure you've signed up for the early bird list. The link's below. I'll see you soon.
WTI swinging like a cowboy's lasso, bullish or bearish, there ain't no way to know. Heading down to Houston, where the deals are made, praying for good fortune in this risky trade. Black gold